Well now, this is interesting. Apparently, in the next 50 years, the average home price in the US will cost over $10 million, which I know sounds way crazy. Did the Real Estate Association pay you to say this, Andre? You must be a landlord. The truth is, I did not get paid and I'm not a landlord or a rapper. You know what's crazy? The median home price today in the US is closer to $363,000, which is a far cry away from 10 million. But hopefully by the end of this video, I can convince you how we're gonna get there. And if you're thinking to yourself, I own 3 houses, I'm gonna be rich, not so fast, because there's a catch. First, I want to give credit where credit is due. This is a video idea I had from Brian Lebo, which is a local content creator who does Las Vegas real estate. He's somebody I like to watch. He's got an awesome channel, so go check him out. But in that video, he talked about an article titled "The Real Estate Bubble Won't Pop" by Jared A. Brock. That's right, I went to Jared's. And in that article, he talks about how real estate is going to become insanely expensive. And I feel like this is really relevant today because I feel like we've all been waiting for that real estate crash since last year, and it didn't happen. We've been waiting this year, and it's not happening. And maybe that's because it'll never happen. So in today's video, I want to go over all the facts and all the numbers, and hopefully you enjoy this video because it's about to get really interesting. Let's begin. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the bad jokes and 90s references. Let's imagine that you and I found a time machine, and along with Doc Brown, we time traveled back to the year 1953, not 55, to tell people that the median home price in 2021 would be $363,000. Nobody in that era would have believed us. Save the clock tower! That's because since the 50s, the median home price has increased 12x. Now let's say we went back to that time machine to time travel forward 50 years from today. We would find that the median home price in the year 2071 would be closer to $4.3 million if we follow that same trend. And that's being conservative because that's not even taking into account all of the financial mechanics that we've invented since the 50s. And so this article starts with saying that we are going through the biggest price change in human history, and that in the future, the average American won't even be able to afford their own home. So the main argument behind why homes are gonna cost over $10 million in the future is because we're in a new price paradigm shift. That sounds like a buzz phrase, like what does that even mean? So the old paradigm is something we're all familiar with, right? That is the thinking that the price of a home today is based on what the average person can afford in a specific area spread over a 30-year period. That's the standard 30-year mortgage that we all know about. But here's what's interesting. Our incomes have not grown in any meaningful way since the year 1978. That means for 43 years, our incomes in terms of purchasing power hasn't gone up, but the prices of goods and assets has. And so the thinking is, well, that's because we're in a bubble, Andre. But according to this article, the new paradigm states that the price of a home in the future will be based on the maximum yearly rental income multiplied by the maximum that an institution can leverage. So that means instead of a home being priced at whatever we can afford for 30 years, in the future, homes will be treated as future investments for really big business. So let's break all that down and see if any of that makes any sense. There's 8 supporting reasons why things are about to get crazy in the next 50 years. So let me give you the reasons first, and then we'll go over the specific mathematics. So reason number 1 is physics. The population is getting bigger. Technically that's chemistry, but I digress. Right now, there's about 7.89 billion people here on Earth. And according to the United Nations, in 50 years, that number will be closer to 9.7 billion. That represents a growth of about 23%. Now, in the world of real estate, it's not a one-to-one correlation. Just because the world grew by 23% does not mean real estate prices must also grow by 23%. But it does mean that most of that growth and demand will come from the major cities. And that's because reason number 2. According to our worldindata.org, it shows that right now, there's about 4 billion people living in major cities. And in 30 years, that number will be closer to 7 billion, and most certainly 8 billion in 50 years. That means twice as many people living in major cities than they do today, and that means twice as many people competing for housing. Reason number 3 is that most of us are choosing to live alone. According to our worldanddata.org, it shows that over the last 50 years, the amount of people that have chosen to live alone has doubled. And this is a global phenomenon. It's not just in the US. And the countries that are affected by this the most are the richest countries, which kind of makes sense. Because if you're somebody who chooses to live alone, it's probably because you have the financial means to do so and you don't need a roommate or a significant other to help you pay for a house. And because we're going into a work from home environment now, more people are choosing to live alone to have that flexibility in case they need to move somewhere else on a whim. And because millennials are getting married later in life, we're choosing to live forever alone longer. Now, a lot of this is obviously cultural, right? Not everywhere is the same, and a lot of cultures choose to be together for a lot longer. But the point is that this is a global trend that is increasing, which ultimately means that we will eventually need more houses. Reason number 4 is that Americans are starting to own more than one house. Right now, there's about 115 million renters and around 23 million landlords in the US, roughly. This means that because of the 23 million people who own more than one house, the other 115 million don't get to as easily because the wealthiest people have more than one. Now, the platform that highlights this difference a lot, and something I can personally relate with, is Airbnb. Because I realize that turning a house into a vacation rental short term is way more profitable than having a long-term renter. And this means that these landlords can make way more money, which they can use to leverage to buy more real estate with, and that makes the problem even worse. And reason number 5 is that new housing is just not keeping up with demand. Believe it or not, right now, we're at a historic all-time low. According to Redfin's data, we're building 6 new homes for every 10 families that need it. So even by today's standards, we're in short supply and we're falling behind. And that's partially because of reason number 6, because it's becoming more expensive to build those new homes as the cost of raw materials has exponentially gone up in value since the start of the pandemic. Materials like lumber, for example, not to mention the labor shortage, which I had trouble with because I bought a house in February of this year and I wanted to remodel it. And what should have taken us 2 months ended up taking 4.5 months. Now, luckily, things have stabilized because unemployment income has stopped and because materials have corrected, but they're still relatively high, much higher than they were at the start of 2020, and that's partially because of reason number 7, everybody's favorite topic, inflation. Now, every market is different, but if you trust the Consumer Price Index by the Bureau of Labor Statistics, it shows that the shelter inflation rate here in the US over the last year has been 2.1%, which is not that bad. But if we take a look at the Canadian real estate market over the last year, it shows that prices are up 26%. Now, I'm not saying that one is true and the other one is not. Both can be true. I'm just saying that there is a spectrum of inflation, and even if we took the lowest end of the spectrum of 2.1% multiplied over 50 years, that gives us an average home price of $1 million. And if we take a look at a 7% inflation rate, which is not unimaginable, that gives us a $10.6 million house. So here's where things get really interesting. Here's the real math behind how some homes will reach over $10 million in the future. And reason number 8 is the penultimate infinite money glitch, leverage. So let's imagine Andrei, the renter right here, who can afford to pay $1,250 a month, which ironically is about what I was paying when I was a renter. And I remember at the time telling myself, Andrei, the most you can afford is about $200,000 for a house, maybe $250 if you really want to stretch it. That was the budget I gave myself. But now let's imagine a landlord comes along who's a little bit wealthier and who treats this as an investment. That person might look at it like this. He could extract at least $1,250 a month. And if that person budgets 50% of that income towards costs, and he wants 2.5% rate of return on his money plus price appreciation, that person might be willing to bid $300,000 for the home. So he's already outbidding me. But let's assume there's another bidder from out of state who realizes, wait a minute, this is a pretty cool Airbnb opportunity. And he realizes that he could easily make $2,500 a month, so twice the landlord's expectations. That person might be willing to bid $600,000 for the house, which is twice as much. But now let's imagine there's a corporation that sees that opportunity. Maybe it's Jeffrey Bezos. And he sees this and he's like, ooh, this is a hot spot. I know it's about to become a really hot place. Yeah, I'm gonna bid on it. What does he bid? Maybe $1.2 million. Why? Because he can, and that's what corporations do. Sometimes they operate at a loss, and that's to destroy their competition. And Amazon is the best example of this because they have operated at a net loss for years, and it does two things. It allows them to invest that money back into their business in order to make more money in the future, and it allows them to operate at a loss long enough to destroy the competition around them. But we're only up to 1.2 million. How do we get to 10? It gets crazier. Corporations can leverage many multiples of that 1.2 million. Because whenever we buy real estate, we leverage our money 5x. We put down a 20% down payment, we get access to an asset that's worth 5 times more, 5x leverage. But corporations can do this on a whole nother level. For example, in 2019, Lowe's was leveraged 12x. Marriott Hotels that same year leveraged 17x. And Colgate and Palmolive was leveraged 72.5x. Now, this sounds crazy. For every dollar that they had on hand, they were able to borrow $72.50, which sounds completely crazy and reckless, but it's actually very smart because they have access to very cheap money that they use to buy assets with, namely other companies. But that's the whole point. But wait, there's more. Once a corporation has enough real estate in its portfolio, it will take the worst performing rental units and package them up into neat little investments that they will then sell off a la 2008 CDO style. So think of apps like Fundrise, for example, which collects money from tens of thousands of clients like us and uses our money to bid on commercial real estate. But nothing theoretically stops them from converting those investments and selling them as derivatives in the open market so that other institutions and hedge funds can use their leveraged money to drive up prices even higher. Now, this is not just some hypothetical scenario that may or may not be happening. Companies like BlackRock, which is a hedge fund, are buying billions of dollars of real estate, and that's just one hedge fund. So chances are, the next time you're buying a house and you get outbid, it could be possible that you were outbid by a billion-dollar corporation. You were good, kid. You were real good. But as long as I'm around, you'll always be second best, eh? But let's just say that you already are a homeowner. I just became one this year. That must mean that we're gonna retire as multi-millionaires, right? Yes. But no. This article then goes on to argue that this system was created this way intentionally because it was set up to make 99.9% of the global population own nothing. Because even if you do own something that you plan to pass on to your grandkids, the system was set up in a way that makes you lose anyway. Because if your property goes to $10 million and you feel really rich, guess what? Property taxes. If we use the national average rate of roughly 1% property taxes a year, 1% of $10 million is still $100,000 a year that you'd have to come up with in after-tax earnings to pay those property taxes. It's at this point in the article where the author offers his solution to the problem, and I'd love to hear from you because I know a lot of people watching my videos probably are landlords or invest in real estate or own more than one house. And the author believes that it is a fundamental human right to have access to shelter. And so his belief is that the best way to solve this problem is by making it illegal to make a profit off of housing, with the exception of commercial real estate. He also goes on to say that we should make it illegal for hedge funds to own non-commercial real estate, make it illegal to bundle up non-commercial real estate to sell as bulk investments, and make it illegal to run an Airbnb in a house you do not live in. Now, of course, because we live in the real world, most likely none of that will happen because there's a lot of money to be made here and money talks. But he does offer more realistic solutions like making real estate not as profitable or make it highly taxable if you own more than one house. Either way, here are my personal thoughts. I'll just let the comment section speak for itself. You know, it's a crazy world we live in. and it's just so crazy that I think it might come true, to a certain degree. Especially if wages don't grow, especially if hedge funds are allowed to leverage to the degree that they do. I don't think the national median will become $10 million, but I can totally see how major cities in the US are going to become so out of reach that the average person will never be able to afford it, and that only corporations will own those homes. That will probably become a reality, especially in cities like Hawaii, places that I've always considered global real estate, places that everybody in the world wants to live. But if I could offer a solution to this problem, you probably already know what I'm going to say. And if you don't, that's why there's Plan B. Something in my eye again. It's Bitcoin. The answer to everything is Bitcoin. I'm so predictable. In the meantime, don't forget to have a great rest of your day. Smash the like button, subscribe if you haven't already. Go get up to $250 worth of free Bitcoin with my BlockFi link right here. Go get your 2 free houses with this Weeble link. I'm just kidding. They're not giving away free houses. That'd be awesome though. It's more like Omaze. They should sponsor my videos. Anyway, go get those 2 free stocks with Weeble, link down below. Go track them automatically with the spreadsheet link down below on my Patreon. Love you. Thank you so much for watching this video. I'll see you back here on Monday, Friday, sometimes a Wednesday. See you soon.